Welcome to Momentum Monday. Today is Sunday, what is it, September 8th.
That's right, buddy. It is final quarter of, I don't know, about 4 months left. It's a hot Sunday here in Phoenix. What's it like in San Diego?
It's pretty hot here too.
All right, let's get right to the markets. A lot going on.
Yes, let me share my screen real quick. And we're looking at the chart of the S&P 500. Last week, it finally cleared its range after 6 weeks bouncing between 280 and 295. It finally cleared that range. It's back above its 50-day moving average, and it's less than 2% from its all-time high. And the situation is similar for the Nasdaq 100. The small caps are still lagging.
Mm-hmm. Yeah, not going to read too much into it. I mean, if we go back to the S&P, pretty amazing. Couldn't tell which way we were going to break. I don't have
incredible resilience considering the news, even though last week, the news was that China and US will meet in October. I don't think anyone is taking that seriously or thinks that anything fruitful will come out of that, but the market just wanted to go higher and it just went higher. Go ahead, Howard.
No, sorry.
The one big thing that really makes an impression to me right now is that many of the software leaders continue to underperform significantly.
Yeah.
And if you pull up most of their charts, you see that they're struggling and they're actually looking. Many of them are looking on the verge of breaking down, which is very odd to me. Because while it's true that typically after a correction we see a new set of leaders, what we just had in August cannot really count as a correction because it was very shallow and very short term, and therefore the leaders from the previous rally should continue to outperform, and we're currently not seeing that. Now, do you need to go to the restroom or something? And as I'm going through the different names, PI is not a software name, but it's one of the former leaders. Also, is hanging on a thin thread here at the 50-day. It uses that level here around 34. I think it can quickly drop to 30. Another one, Anaplan. After it broke below its 50-day, it just keeps setting up on the bearish side. And there's so many other examples in the same enterprise software field, like stocks that are not.
Yeah, take a look. We look at Workday and Zen.
Yeah, absolutely, and those are not really looking any differently. They're kind of holding near the 200-day moving average, and Workday is even doing worse than that. It broke below the 200-day after.
The question is, do the good ones follow? So if I was to look at, a couple of my other ones that look weak, Shopify obviously continues to look strong, but that would be the last to break. Twilio.
My thinking is that if this market rally has more legs up, all those leaders should bounce, because otherwise I don't think this rally has any legs up, because I don't really see any other leadership that really stands out. Yes, we have Twitter, which obviously is right now one of the major leaders.
But it's not explosive growth. My concern with those is that could easily drop 10% quickly just with a market correction and be back in its base. It doesn't have explosive growth. The explosive growth companies are churning and rolling. You got to be careful. So go back to Zen, which I've owned forever. That's looking vulnerable. That pattern looks like it's, with relative strength dropping, there's some gaps that could go, these stocks could surprise on the downside. Where's Salesforce?
Salesforce is just stuck in a range, kind of. And it, as you can see, its relative strength is dropping compared to the rest of the market. So it's very, very interesting.
Yeah, I feel like there's an event out there for these software stocks. I don't know what it is, but with the relative strength of Salesforce at 47, with the stock 10% off all-time highs, it just smells something in this. I can't put my finger on it. Like these things, you know.
An event, it might be a process, because they started rallying 2 years ago.
Like you can't catch up to this 47 relative strength rating with stocks this close to all-time highs. So I feel like there's some gaps. I'm wondering, you know, where it's coming from. But yeah, if we lose the growth, you know, it's a hard market for me to read, because, which is kind of why I've been light, is like you can't. The market breadth is pretty good. I mean, the new high, new low differentials at all-time highs. So there's leadership. It's just not the stuff that we've been used to watching. So let's go to our list and see if we notice anything.
I mean,
Twitter.
Not that many new names.
These are the same names we've been looking at. Elastic. None of these stocks are ripping. Like if I look at Akamai, which is on this, I mean, the company's been a perennial disappointer. If you go back to a weekly, it's just had huge ranges in between 40 and 80. You know, it's just breaking out. So again, this could be a new leader. It could be breaking out Akamai because of security. You know, Cloudflare is going public. So there's some leadership right there. I've been burned in the stock, so I haven't. So you know, if we check our leadership, there is some rotation. This is consumer electronics. Akamai is more security and internet applications. Twitter is social media. Snapchat, social media. So there is some leadership. I don't know if it's as big and as broad as we've had in software, but there is. Let's go back to the list, Ivan. See if we can notice any other trends. So keys, AYX has probably been the strongest of the stock. And it's one that I missed because I didn't follow the story. I mean, it's hard, you know, so there is a bull market still. Like if you look, you don't have to look too deep on our list to go, you know, here's one of the great charts. And if I'd just done a little more work on this company, they're just eating everybody's lunch in data management. And talking to a few of my subscribers that work at Cisco, and you know, it's just been an easy trend. These guys make data usable for everyday people looking to do research on, for example, how people in seat 43 at a football game spend their money, how many beers they have. So this is what a company like Alteryx does. It's just hard for regular people to really dig in and understand that. But you know, trading at 200 times earnings, you know, it's not.
The valuations are insane, and this is what I think one of the yellow lights about the current rally is that if people all of a sudden are caring about valuations, it's very hard to believe that this rally will continue for much longer.
That was a stake in the ground as we work this week. So if we're really going to think of what can make people think about valuations, they brazenly came out with a $45 billion price. And within 2 weeks of the S1, they're now talking about $20 billion, and feels like they're just going to pull the damn IPO. So in the end, it wouldn't take much for these stocks to drop 30, 40% without even any earnings news. It just could be the event of WeWork. You also have Uber, you know, all-time lows, lots of supply. I mean, just get it killed. And Lyft, all-time lows. We've got Slack, which actually I bought a little bit on Friday, all-time lows. Just no bottoms in sight for some of these stocks, and then you have the commodities raging. Silver, gold, they're in a small pullback right now, but you know that chart. If it was any other chart, I'd say those are buys on pullbacks. But they're commodities with no, and same with bonds. Like on a pullback, I'd say buy, but they have no cash flow, right? So it's gold and silver. So I'm saying like the dynamics of the market are for sure changing. Anything else that you see? Any other leadership that you've noticed on our list that stands out?
I mean, I noticed that there's some of the earnings gappers that gave back the gap are now starting to set up again. For example, CF, which is how they sell fertilizers, is starting to set up again above its 50-day. It might be good for a swing trade. I mean, they're interesting names, but nothing really stands out that much. Keys is another one that is holding well. It had a big earnings gap in August, and now is setting up near all-time highs. Another one that is interesting, I think, is Pinterest, which just keeps going down. I mean, look at all the other social media, Snapchat and Twitter.
They're coming off lockup. They're constantly getting, Instagram's now going after Pinterest with collections. So again, like, this is just all, these are not cheap stocks. They're not growing, fast enough to cover their valuations. The company is looking to make a penny in 2020. Even in a low interest rate environment, some people are starting to have enough. I really do think seeing Uber, Lyft, Slack, and this WeWork mess is starting to weigh on, we kind of moved on from the rhetoric and not understanding what the president is going to say and what he means, to let's be real. Even if we're not going to have a recession, which I never thought we were going to have, even if we're not going to have a recession, how good can these be? So that's the semiconductor ETF is kind of a good sign, I would say. It's kind of been rolling over, not rolling over. If we look at, NVIDIA seems to have bottomed.
Yeah, it's trying to build a new base, but there are some other semiconductors looking better.
No, but they're starting to bottom. Like, the big ones are starting to bottom. TER, which I own, is kind of.
Yeah, absolutely. It held its gap here, and now it's setting up again.
Doing its thing. AMD looks strong.
Kind of. I mean, still needs to go above.
It doesn't. Yeah.
Until it.
There is some leadership. It's just we're so used to seeing stocks that we understand and simple software story ideas and recurring revenue companies just kind of got so lazy, just kind of doing everything one way. We're going to have to start digging deeper, I think, as we move forward.
I think right now there's something for both bulls and bears. And if software stocks continue to underperform, they'll be amazing short candidates. And they've been amazing short candidates in the past week or so.
Yeah, interesting. For nimble traders, you're going to have to go from long to short, especially if the markets hold up, because the money will rotate. I'm just trying to figure out where the money will rotate. It looks like semiconductors, but that's overall bullish. What about biotechs? I mean, Amgen's right there at all-time highs.
Big ones are holding better than the rest. But if we look at, absolutely, Amgen and, Illumina, let's take a look.
And that rolled over Illumina.
Yeah. So, Amgen is definitely standing out. But if we take a look at the ETFs, they're kind of underperforming and struggling below the 200-day as a sector.
Yeah. Let's go back to the S&P. It's really tricky because it looks excellent.
Yeah, the index itself looks amazing, and that's why I'm so curious why I'm not seeing so many great
year. The S&P is up like 17%. So, I think Lulu, obviously, there are winners. My Lulu, it just won't stop. Nike looks like it's ready to break out despite the China woes.
Nike is locked in a range. I wouldn't chase it.
No, but I'm saying, considering if you told me the tariff stuff was going to be going on this long, and Nike would be holding up this well, and Apple holding up really well. It's back above where they were on earnings day. It's in that gap area, but where the gap to 220. But it's holding in this area despite. The fact that their whole business could be in disarray, or their whole supply chain could be in disarray. So software No, potentially a big switch in what people want, but at the same time, there's a lot of big companies like the Akamais, the Apples, that are kind of sopping up. Even Amazon still kind of just holding that 1700. Here's Google. They don't look great. They just don't look bad. So I think software can roll over, and a lot of this stuff can be digested. So I think you're going to have to be in the right stocks going into this next move higher, and we'll just have to keep an eye on that.
Yeah, I agree.
All right, so everybody have a great week. Hit us up if you have questions.
Okay, see you next week.
Thanks, Ivan.
Bye. And
so I think it's cool because both our videos are on here now, right?
at the beginning, yes. Wait.
No, I think like Zoom works better.